Thank you for watching this preview video at xm.com. We'll be discussing upcoming Eurozone inflation data and the potential reaction in the euro. I'm Maria Bashordes, and joining me is investment analyst Achilleas Georgopoulos. So Achilleas, since the October ECB meeting, economic data in the euro area has been mixed. This week, we'll get the preliminary inflation report for November. What are we expecting there, and how might these figures impact market expectations?
Good morning, Maria, and thank you for the question. We have to admit that we are entering a nice and busy period. As we're entering December, we get the last round of central bank meetings for 2023. The ECB meeting comes on the 14th of December, a day after the Fed meeting. So these are two dates our viewers should essentially keep on the back of their minds. Now, in terms of the ECB, the market will be extremely interested in the meeting and the overall rhetoric. Up to now, and since the last meeting in October, we have seen ECB officials essentially coming out in a force and talking about a few things. For example, rate hikes, they state, are essentially still on the table. They believe that even if they don't hike, rate cuts are a while until they essentially come to the discussion. So it's something that different to what the market expects at this stage. ECB officials also continue to expect a soft patch in terms of growth. This is expected to continue for 2024, but there will be no recession. And finally, ECB officials think that inflation is probably going to edge higher over the coming months. Of course, at the end of the day, their stance and what happens at the December meeting and in 2024 depends on the data. And the data have been mixed recently. In this context, we get the preliminary November inflation report for Germany and, of course, for the euro area. On Wednesday, we'll get the German number. The headline figure is seen decelerating a bit to around 3.5%. More importantly, on Thursday, we will get the Eurozone aggregate. The important there will be not the headline, which will drop below 2.9%, but the core indicator. The core indicator essentially has gained prominence over the past few months because it does not include energy, which tends to be very volatile. This figure, the core indicator, is expected to drop below 4% for the first time since July 2022. Having said that, of course, it's proving to be a bit more stubborn than people expected and, of course, ECB officials expected. And that kind of complicates the outlook and it creates worries at the ECB halls. Now, the market is fixated for rate cuts. They expect the first 25 basis points by June 2024. Now, if we get a strong print this week, so inflation kind of edges higher, the market is unlikely to react much. Essentially, it's unlikely to unwind its expectations. We need a series of good data releases, especially growth indicators like the PMIs, and continuously upside surprises at inflation for the market to reconsider its stance.
Turning to the euro now, it has been outperforming the pound since late August. But do you think this trend will change over the next few weeks? What should traders look out for?
Yes, it has been a good period for euro bulls since essentially late August, outperforming the pound. However, last week's autumn statement from essentially the UK government seems to have invigorated the pound. We see a small pullback in the euro-pound pair, but the next leg will essentially depend on this week's data, and of course the inflation report we've been analyzing. If we get an upside surprise, then we could see euro-pound edging higher, essentially towards the 0.8794 area. On the flip side, weak data releases and somewhat dovish rhetoric from ECB officials means that the current collection might have legs, essentially with the 86.35 level being the next credible target.
Achilleas, thanks so much. This was a preview video here at xm.com.